Welcome to everyone in financial services class. So today we'll go for mutual fund topic again. As I have told, it is a little bit bigger topic. Okay, and today we'll learn about growth of mutual fund in India. That is your history, geography, whatever you can say. Okay, that is when it started and how it grown up and downs. Okay, when who have entered when in this mutual fund area. Okay, each and everything we'll try to check out. Okay, so here we can check. I have taken with the help of Google different phases, okay, about the growth of your mutual fund. So first we'll check out phase 1, that is all about your formation and growth of UTI, Unit Trust of India. Okay, and actually we used to say that the history of mutual fund industry in India can be traced back to 1963. That was your launch of Unit Trust of India by the Government of India under an Act of Parliament. Okay, UTI was launched under the regulatory and administrative control of RBI. In 1978, the control of UTI was transferred from RBI to IDBI. Okay, and UTI first mutual fund scheme was introduced in India in 1964. Okay, and UTI had assets under management worth rupees 6,700 crores by the year end of 1988. Okay, and actually from the date of your inception of the year 1987, the growth of UTI multiplied nicely. Like you can say, there was a tremendous growth. People were very much interested to go for investment because it was a kind of new thing in the India, and it was attracting the small size, or you can say the all size of investors also. So you can say the starting of mutual fund is somewhere related with the incorporation and introduction of UTI. Fine. Now we can check the phase 2. Okay, and before phase 2, if you can keep remember the things, okay, we can say that your UTI ULIP plan, that is unit linked insurance plan, they are first introduced it in the year 1971, and Indians first Indian offshore fund. Okay, first Indian offshore fund was launched in the year 1986. Okay, so that was about your phase 1, which all happens first time with your UTI. Okay, so now let's check about your phase 2, that is all about your establishment of public sector funds. Year I have just given 1987 to 1992. Okay, so we can say that actually in 1987, public sector enterprises such as your State Bank of India, Punjab National Bank, Canara Bank, okay, and other non-UTI segments like General Insurance Corporation of India, Life Insurance Corporation of India, they all entered in the mutual fund market, and they also established public sector mutual fund. Okay, because in the year 1987 they got the permission, or they also got allowed to start the mutual fund houses. Okay, and everybody started. Very first year, definitely State Bank of India was the first bank to establish the mutual fund company in the year 1987. Okay, and you can say that your other banks like Canara Bank, Punjab National Bank, okay, Indian Bank, Bank of India, these all followed the State Bank of India steps. Okay, and actually if we say that, fine, during that period also the assets under management growth was very nice. Okay, somewhere they had the total assets value under the management 47,004 crores. Okay, as investors in India started showing great interest in this financial tool, and started investing a large part of their salary in mutual fund. People got excited, you can say. Okay, so something new and which is able to give the best return on the investment, definitely excitement for everyone. Okay, and people started using it. So that is about your phase 2. Phase 1 UTI, phase 2 entrance of public sector, and public sector also entered into the mutual fund market. Okay, next we have phase 3. Okay, so okay, it's actually a little bit easy also, you can make it. Fine, first UTI came, then public sector came. So after public sector, definitely which is left? Private sector left. So at your third stage, private sector got permission to enter into the mutual fund area. Okay, and they got the permission to open and start their or establish their private sector mutual funds in 1993. And when actually they have also entered into the mutual fund area, mutual fund market. Okay, definitely the competition got increased, because now there was the competition between your public, private. Okay, public private sector, always the competition used to be there that we are providing the best services. So competition became more, but same time it gave the Indian investors extensive opportunity also to choose the mutual funds from public and private sector. So competition also increased, but same time opportunity to choose also increase. You got the extra opportunity. Okay, and actually in the same year, that is in your 1993, mutual fund regulations were introduced in India. Okay, and under which all mutual funds except UTI, all mutual fund except UTI has to be registered. It was made compulsory that each and every mutual fund has to get registered, fine, except your UTI. And if you want to keep remember, the first private sector mutual fund that was registered was the Kothari fund. Okay, so this is your about the third phase. Again I am repeating so that you should not forget. Okay, or you can say that it should be positioned very nicely in your mind. First phase UTI, second phase public sector, third phase private sector. Now to check out the phase 4, growth and introduction of SEBI regulation. Okay, so when definitely your public sector, private sector all entered in the market, and now the market had the lots of competition, and market had lots of choice also or options also for the investors to whether invest in public sector, to whether invest in private sector, which mutual fund option I should opt and why. So definitely people started feeling the need or requirement of the somebody which can put some control over these transactions, and somebody which can introduce some regulations. So definitely we got SEBI. Okay, and during this phase, as I have written here also, SEBI and AMFI, Association of Mutual Fund in India, AMFI, launches the awareness scheme of investors for investors of mutual fund. Okay, so they started that we should have some control over, or you can say that a body to create the rules and regulations for mutual fund industry, and to create a responsible organizations to overlook the working of this sector. Okay, so SEBI got incorporated in 1996. And SEBI introduced what? Standardization, tried to set uniform rules and regulations for all the fund. Okay, so awareness for investors also, and rules and regulations for all the mutual funds, just to make sure transparent and uniformity. Okay, so rules and regulations same for all the funds, uniform rules and regulations. Okay, so that was your phase 4. Now to check out phase 5, as you can read here, emergence of a large and stable industry. So industry grown very largely because all the sectors now entered in mutual fund area market and got varieties of options. Okay, so market got large. Okay, and if we can read here, increase of assets under management from rupees 68,000 crore in the previous phase, that was your phase 4, to over rupees 1.50 lakh crores during this phase. So very nice hike in terms of your assets under management also under this mutual fund market in this phase. Okay, very nice growth was there. Okay, and this phase actually you can say that where your entire industry had the similar set of rules and regulations. Okay, and even the uniform and standardized operations and regulations made it easier for investors to invest in various mutual fund companies, and which definitely increase the assets under management. Okay, so that is your phase 5 of mutual fund growth in India. Next phase we'll check out. We have the phase 6, that is your amalgamation and growth 2000 onwards. Okay, so here you can say that from the year 2004, okay, the industry started going for mergers, demergers, acquisitions, okay, to capture maximum market. Okay, and industry was like getting the new players, and they were just trying to go for the mergers and acquisitions to continue the journey towards the growth. Okay, to manage globalization. So you can say that to manage the growth, globalizations and all, they gone for the very nicely mergers and acquisitions. Okay, where for example we can take that Alliance Mutual Fund taken over by your Birla Sun Life. Okay, so this is your like mergers and acquisition phase to continue the growth journey, and which is still continuing. Okay, so if we are going to recall the things, fine, growth of your mutual fund in India, we used to divide into the 6 phase, where first phase I told what? Your UTI. Second phase we had entry of public sector in mutual fund market. Third phase we had entry of private sector in mutual fund market. Fourth phase we had SEBI regulations introduction. Okay. Fifth phase we had that large and stable industry. Okay, we had a similar set of rules and regulations for the entire industry, which resulted into the your what? Increase in assets under management. And then phase 6 to try, or you can towards the continuing the journey towards growth, we have gone for the mergers and acquisitions. Okay, so this is your all the 6 various phases related to your mutual fund in India. And under this topic, little bit you have to by heart also the year, because for 2 marks they used to ask you which was the first mutual fund in India. So definitely very easy answer at your phase 1 only, UTI. Okay, in 1964. Fine. And then maybe they can ask you that when the public sector got the permission to enter into the mutual fund markets, we have to keep remember again the year 1987. Then again same, may you will have the question like maybe when in which year per private sector got the permission. So again the year 1993. Okay, so like this you have to keep remember some years also. By hearting is somewhere by hearting, not totally, little bit by hearting is required under this topic. In which year SEBI regulations came, or in which year your incorporation of SEBI regulations came. So that year again your 1996. If you remember in the last topic where we have gone for the structure of mutual fund, there also we have seen that trustee has to make sure, the trustee main work was to make sure that mutual fund is running as per the compliance of your SEBI regulations 1996. So that are the regulations which SEBI made for the mutual fund industry. Trying for what? Trying to go for the uniform rules and regulations for all the funds, and even same time to create the awareness for investors. Okay, and as the investors got lots of awareness and they thought that now regulations are there, so and uniform rules and regulations are there and transparency will be there, so phase 5th started. What? Your large and stable industry. Investors got too much interested to go for the investment in various mutual fund companies. Fine. And as the market, mutual fund market kept on growing, we got the another phase 6 with what? Your merger and acquisition. So in shortcut, please keep remember and please try to keep remember the years also. So this much for the day. Okay, and I'll make sure as soon as possible I'll give you the notes of SEBI guidelines for mutual fund. Okay, I'm really sorry for that. I'll not make the PPT or I'll not make the any recorded video. I'll give you the notes, 15 points. I have tried to collect from the Google and I have tried to keep those 15 points easy only for you, or kind of you can say that repeated from your last topics like open-ended and close-ended, different types of your mutual fund or your structure of the mutual fund, so that those 15 points you can keep remember easily. Okay, so that also maybe by this Thursday I'll forward you, and next class you can now feel happy. Next class we'll start the next topic. Mutual fund as per syllabus ends here. Okay, so let's see which will be the next topic in next class. Till then, thank you. Have a nice day. Enjoy.